back to the major averages because joining us now is Aaron Gibbs, Chief Investment Officer at Main Street Asset Management. And Aaron, stocks closing at session lows. Your thoughts on today's just meltdown?
Yeah, obviously, you can't ignore the Meta reports that came out last night, and it really was two different stories. Though all of the markets were down, growth and those high valuation momentum stocks were down more than twice as much as your defensive value stocks. So the S&P 500 growth was down 3.5%, and the value was only down 1%. So it was clearly a sell-off of anything expensive. And really those mega caps, and you could even see that when you look at equal weight indices. So very much a targeted sell-off today, and which hurts the bigger indices so much because they have, we're talking about, the sixth biggest stock, and certainly there's a lot of worries about the Amazon report, which is the fourth biggest stock in the S&P 500.
So your thoughts on earnings season so far compared to last year's mostly strong results across the board?
Right. So it's not quite as good as last year's. We're right now, beat rate is about 78%, and the surprises are a little smaller. Last year, the average was 83% beat rate. And I know like 78, 83 doesn't sound like a lot, but when you look at historically that beat rate, that's actually a big difference. So analysts have gotten, I guess, a little better at predicting what companies are going to earn, and perhaps companies weren't quite as prepared to beat as they have been for all of last year. However, the good news, even though fourth quarter and earnings are improving, obviously there's a lot more surprises. We're talking almost 80%. What's important is that going forward, the guidance so far has really been ratcheted up. And just a week ago, the earnings growth for the S&P 500 was expected to be about 8.8%. It's now up to 9.5%. So that's a big difference. Almost a 10% increase. So, or 7% increase. So that's good that we're still only halfway through earnings season, or a little over halfway. And we're seeing big increases for what we expect for this year when it comes to earnings growth. So even though right now, I'm certainly looking at, it's all red on my screen today, there is some positive news that going forward, we are looking at a more stronger year than previously expected.
So let's go back to Meta, back to Facebook. Let's take a look at the earnings and just your thoughts overall on what it reported. What do you think of the results? They did mention some headwinds when it comes to Apple and their privacy changes, but were there things in the report that you like, that you strongly dislike? Tell me.
Looking through the report, I think they just got hit on all sides between, a lot of negative a lot more competition. We always knew that was there. But people using some of the platforms less, lower daily user numbers, and on top of it, obviously the Apple stopping them. They're really getting hit on all sides, and they're not very good at communicating how they're going to grow in the future. They like to talk about metaverse. They like to talk about virtual reality. That's something that they're trying to say is, their 5-year plan for growth. But it hasn't come about yet. And it's really, when investors are looking at it, it's just too small and too far off for people to really get excited about it and pay these extraordinary high valuations. And so I think that's why we saw such a big correction is, we don't trust you on being able to create, the advertising. You've been a bit behind on the video component, though Instagram's trying to catch up. You're behind on embracing the video component. You've got a few headwinds as in the environment you are. Obviously, there's still lots of antitrust rumors around Meta all the time, and you're not really good at talking to me about what I'm excited for the future. And so I think we need to clean up that message and really see some real traction within some of the acquisitions that they made. So for now, I think that this correction feels fair.
All right, Aaron Gibbs, I want you to stick around. She's the Chief Investment Officer at